Here's what's coming up on the program today. United Nations report ranks Tanzania third fastest growing economy in Africa. And Uganda's March coffee exports up 2% on favorable prices. Rwanda and Malta explore new areas of cooperation. Hello and welcome to another exciting edition of Business Incorporated. I'm Will Ibong. Let's check in on the markets right now. We begin with Africa, where most major equities are still closed for the Muslim holiday. However, South Africa's JSE traded with positive sentiment at intraday today. It was up nearly 0.5% at intraday. When we look at the flip side, we see Egypt, which was closed in negative territory last Thursday, was down 0.13%, while Kenya is still well in the green and still well below the 120 level. Now we slide to the Middle East, where most major equities markets were closed as well for the Eid holidays, except in the UAE, where equities were trading with positive sentiment at intraday. The Abu Dhabi index was up 0.21%. Dubai's index, however, was up 0.79%. And touching base with last week's close for Saudi and Qatar, we see the mixed close for both indexes. Saudi was up 1.19%. Qatar was in the red, 0.18%. Now, Sweden's SIPRI Institute has a new report out, and experts say that military spending around the world is at historically high levels. Global military expenditures hit a record $2.24 trillion. That's 2.2% of the world's gross domestic product, according to the Stockholm International Peace Research Institute. What effects do these have on countries' budgets as well as companies and markets? Lars Holter with Deutsche Welle joins me from Berlin. Lars, what can you tell us about these latest numbers?
Yeah, thanks for having me. And now, first of all, the numbers aren't entirely surprising. After all, there's been a war in Europe for over a year now, with Russia fighting against Ukraine. And many other countries have been involved in two ways: by sending weapons and other goods to Ukraine to help the attacked nation, and also by stocking up themselves. Because with a war raging nearby, every country in Europe had to take a closer look at its own military, including Germany, by the way. The German government saw that its military was in desolate shape and promised to spend an additional 100 billion euros to fix that. Now, looking at all the European countries combined, their military spending is up 13%. It's the biggest annual climb in 3 decades. And yes, in historical terms, military spending is now higher than ever since the end of the Cold War. Also, here's a global number. Military spending worldwide stands at just over $2.2 trillion. That's 2.2% of the global GDP. And that is an interesting development right there. NATO has long had a policy that member states spend 2% of their gross domestic product on defense. Not everybody had gone along with that in the past, but it turns out the ongoing war has led to governments accepting that spending goal.
Mind-blowing there, Lars. Let's look at some of the countries in particular, especially Russia and Ukraine. How much are they spending on this ongoing war?
Well, numbers for Russia are hard to come by, says the SIPRI Institute, but they estimate that Moscow has increased military spending by almost 10% to $86.4 billion. As for the Ukraine, the nation under attack has increased military spending 7-fold. The government in Kiev last year has spent $44 billion on defense. That's around a third of the country's GDP. The biggest spenders, however, are the usual suspects. The United States invested $877 billion in its military programs, and also spending a lot more in recent years is China. Beijing has been massively investing in its navy. That's with an eye on Taiwan, of course, and has led to other countries in the region increasing their spending too. There would be Japan and Indonesia, for example, but also nearby Australia.
So what have the effects been on companies and markets?
Well, defense companies have had a big year, obviously, and that's true for US, European, and other companies. Here's an example out of Germany. The country's largest defense contractor here is Rheinmetall. They're one of the two makers of the Leopard tank that's been sent to Ukraine. And Rheinmetall has recently seen so much growth that the company was catapulted into the German blue chip index DAX. Now, that changed the way investors are looking at it and at the sector in general. Defense stocks were not something people like to talk about or invest in. And that notion has changed since Russia started its war in Ukraine. Defense companies are seen in a much more positive light and as a valid investment.
Thanks, lads, for that update. Always good to have your perspective. Now we glide over to the UK to get the latest updates from our correspondent, Juliana Olayinka. Hi, Juliana. UK Prime Minister Rishi Sunak is planning to woo corporate Britain with new business forum. What are you hearing about this?
Good afternoon, Will. That's absolutely right. The UK economic growth is pretty stagnant at the moment. I think Rishi Sunak's administration knows that it can't achieve its economic objectives alone, which is why today, alongside his Chancellor Jeremy Hunt and the Minister for Trade, Kemi Badenoch, they have convened in the City of London to host the Business Connect conference. So what we've seen is about 200 execs from pretty much the most lucrative businesses in the UK, crossing several sectors, including science, technology, life sciences and banking, basically to ask for their support. And there are a number of reasons why. One of them being is that businesses did have a pretty fractured relationship with Boris Johnson, shall we say. A lot of them really not happy with the Brexit conditions. Then, of course, we had a pretty sudden, shocking, short tenureship of Liz Truss that caused a lot of fallout. So Rishi Sunak is really trying to bring them back in, bring them around the table, particularly as we're going through a massive industrial action at the moment. And he does want them on side. So he has been speaking in the City of London this morning. I think it actually started off with an online LinkedIn conference where he was asking and answering questions from the business community. But there is a shadow, as there usually is a shadow with most political events, and that is about the Confederation of British Industry, where just a month ago it was the most influential, the biggest business lobby group in the UK. I believe it was representing about 200,000 businesses. Their chief executive, Tony Dacker, had to step down because of allegations over sexual misconduct. And then during that probe, we actually were told that two women were allegedly raped by two senior males at the CBI. Not great, particularly as they had the ear to the British government. And of course, they were the go-to person between government and business. So it's not great. That has cast a shadow. But listening to some of the remarks that Rishi Sunak made earlier today, he is feeling very, very confident, and he does want to put an arm around the business community in the UK so that they can walk together, so that we can finally see some growth, which we haven't seen for many, many years in this country.
Yeah, I was beginning to wonder that this Business Connect conference is much needed now, especially with the CBI scandal that you mentioned, and top companies, top firms, breaking off engagement with that Confederation of Businesses in the UK. You mentioned it houses over 200,000 companies. That's a huge one for the country, and so this is quite apt at the moment. But we're seeing growth in house prices, which are coming in at a much slower pace, and homes are selling more quickly. It appears sellers are now having an economic reality check here, Juliana. Is that what's happening?
Yeah, I think an economic reality check is a really good term, actually, Will, because, of course, we are entering the spring market, which is a new period for first-time buyers, which I believe make up about a third of the UK's housing sector. And, of course, we know the housing sector has been tumultuous recently. Again, sorry to mention Liz Truss, Rishi Sunak's predecessor, but her economic agenda caused a lot of turmoil. You know, mortgage rates were skyrocketing. And then, of course, we've got sky-high inflation, which has led to the cost of borrowing being at records high. I think interest rates are currently at about 4.2% at the moment. So it's been a really difficult period for mortgage owners and the property sector. And then we've got this data this morning, which was released by Rightmove, Rightmove is one of the largest property advertisers in the UK, and their data shows that house prices are still growing in the UK, but growth is much slower. It came in last month at 0.2%. Typically, about this time of the year, you would expect it to be at about 1.1%. But again, it goes to that remark you made about an economic reality check. And I think that's what homeowners are getting. They realise they want to sell their home quickly. If you look at the cost of living, high inflation, stagnant wage growth, I think they're starting to realise that perhaps it's not a great idea to add an extra £10,000 on your property when people are really struggling, which is why I think lots of economists or analysts looking at the industry think that prices are lower now. Still very, very expensive. I don't have my Naira calculator to be able to, get the Naira denomination for you. But I can tell you, if you want to buy a property in London, Will, it's going to cost you about £500,000, Will.
Wow.
£500,000. Wow, £500,000.
That's a lot, Juliana.
It's a lot of money. It is a lot of money. It is expensive to live in the UK. And so I think it's dipped slightly. But I know you can afford it, Will. I know you can afford it.
Okay, Juliana, with you there, I think I can afford it.
It's still expensive. Yes, we'll do a house
super
share.
Expensive, Juliana. But we're looking at, I think house sellers are making a wise decision right now with lowering prices. But how are markets looking on the first trading day of the week? I know it's a holiday here, but it's not a holiday in London.
It's not a holiday in London, well, unless you are still celebrating Eid. But yes, not great, actually. The FTSE is in the red at intraday. It's down 0.05%, the all-share. FTSE 100 down 2 at just 0.10%. But the FTSE 250, the domestic market, up slightly by 0.02%. I think investors have been reacting to yesterday's comments by Andy Haldane, who was the former chief economist at the Bank of England. He predicts that within the next 6 months, inflation will fall rapidly. Fingers crossed that that happens. So we had investor reaction there. In the currencies market, the British pound is currently trading down on the US dollar by 0.13%, down 2 against the euro by 0.26%. But at intraday, the British pound is trading up against the Japanese yen by 0.40%, Will.
We'll see how tomorrow pans out, Juliana. Thank you so much for joining us today and giving your perspective.
Thank you.
And now to Asia, where markets were broadly lower on Monday ahead of a busy week of key economic releases in the region. Most major markets were down except Japan, which bucked the regional trend. The Nikkei 225 ended Monday slightly above the flat line, up 0.10% to close at 28,593 points. Investors will be watching closely the Bank of Japan's monetary policy meeting later this week. And in Australia, we see the S&P ASX 200 down 0.11%, closing lower there. And in mainland China, the Shenzhen component was down, shed 1.16% to close at 11,317, and the Shanghai Composite was down as well, 0.78% to finish the trading day. Hong Kong's Hang Seng Index gave up earlier gains and fell about 0.82% lower in its final hour of trade, while the Hang Seng Tech Index reversed gains and was about 0.4% lower in the final hour of trade. Now, stock futures fell early on Monday as investors await a slew of corporate earnings from big tech companies, as well as fresh economic data releases. Dow Jones Industrial Average futures fell 0.21%. S&P 500 and NASDAQ 100 futures dipped 0.23% and 0.2% each. Now, the major indexes all closed Friday on a downturn for the week as the earnings season began to ramp up, with several prominent banking names posting their quarterly results for the first time since the bank failures in March. Now, while 76% of S&P 500 companies reporting earnings so far are beating analysts' earnings per share estimates, according to FactSet, markets were less optimistic as corporate profits fell, and Revenue data says first quarter earnings for S&P 500 companies are estimated to decline an overall 5.2%. Investors are also keeping an eye out for new economic data that will provide insight into whether inflation is cooling or if the Federal Reserve will announce another rate hike at its next meeting in early May. Now, a break. We're taking a break now. When we come back, we're looking at Ghana's economy, which grew higher than expected. That conversation next. Do stay with us. This is Business Incorporated. Welcome back. Now, Ghana's economy grew more than forecast in the last quarter of 2022, even as the nation dealt with inflation well above 40% and a debt payment moratorium and rising interest rates. Gross domestic product expanded, thus grew by 3.7% from a year earlier in the 3 months through December, compared with upwardly revised growth of 3.1% in the previous quarter. Mike Kruniger, senior country risk analyst, Fitch Solutions, joins me to give more insights. Good afternoon, Mike. It's good to have you on the program.
Hey, Will. Thanks for having me. Excited to be here.
So, Mike, Ghana's Q4 2022 GDP growth beat expectations. What do you think contributed to this, despite weakening business sentiment and high inflation in the country?
Yeah, absolutely. So, as you mentioned, the Ghanaian economy expanded by 3.7% year on year in the final quarter of 2022, up from 3.1% in the third quarter of last year. The uptick in growth took most economists, including myself, by surprise, given that inflation absolutely skyrocketed to over 50% in Q4, which contributed to a significant worsening in private sector sentiment in the country. So if we look at some key indicators that are published by the Bank of Ghana, the central bank, such as their consumer and business confidence indices, they all dropped to multi-year lows in Q4, which made that acceleration in Q4 so remarkable. So looking at the growth figure itself in a little bit more detail, I think it becomes clear that the mining sector really did the heavy lifting in Q4. Growth in the mining industry remained in double digits, growing above 10%, which we believe is partially driven by the start of commercial gold production at Ghana's Bibiani gold mine, which started in November. We also saw really resilient growth in some other sectors of the economy, including the information and communication sector, the ICT sector, as well as the financial services industry. I do want to stress here, though, that while economic growth in Q4 accelerated, the outturn of 3.7% does remain below Ghana's historic growth trajectory. So in the 5 years leading up to the COVID-19 pandemic, economic growth averaged roughly 5.5%, indicating that the 3.7% reported in Q4 is not necessarily a great outturn for Ghana. And I think this is reflected by some really weak performances in some of Ghana's key industries, such as construction and the real estate sector, both recording significant contractions in the final quarter of 2022.
We would say that that's a better outcome. As you mentioned, the country is going through a lot. Right now, the country, that's Ghana, is still working to restructure most of its public liabilities, which is estimated at about 576 billion cedis. That's $49 billion at the end of November. It plans to cut its debt from an estimated 105% of GDP in 2022 to 55% by 2028. What is the reality of this, of Ghana achieving this target by that time?
Yeah, I think that's a really important question. And you're absolutely right. Ghana aims to restructure its debt, and it's doing so in two different ways, right? So on the one hand, we have its domestic debt swap, and on the other, we have its external debt restructuring program. Now, the Ministry of Finance already achieved some success regarding its domestic debt swap, which closed in February, a couple of weeks ago. The authorities announced that over 85% or over 80% of eligible domestic bondholders have signed up to the domestic debt exchange program, which equates to roughly 83 billion cedi. Now, I think the bigger challenge for the Ghanaian government really lies in the external debt restructuring program. The Ministry of Finance announced that it's seeking to restructure Ghana's external debt under the G20 Common Framework, a process that has proven to be extremely lengthy for other countries, right, including Zambia, which 2 years after it started official debt negotiations, still hasn't been able to restructure its debt. So the first step for Ghana now is to set up an official creditor committee, something that Paris Club members have already said they're on board with. However, negotiations with China, which is Ghana's largest bilateral creditor, are still ongoing. So overall, this process is far from over and is really going to take a significant amount of effort and time on behalf of the Ghanaian government to achieve this.
So with all that said, do you see a continued economic growth or slowdown given the country's prevailing concerns?
Yeah, I think that unfortunately in the short term, economic growth will weaken. So at BMI, we project that real GDP growth in Ghana will soften to 2.9% in 2023 from the 3.1% recorded in 2022. Again, this is well below Ghana's pre-pandemic growth trends of roughly 5.5%, indicating that the economy will continue to face significant headwinds in the short term. One of those headwinds is, unsurprisingly, still really high levels of inflation. So while consumer price growth has been moderating since January on the back of a more stable exchange rate, it does remain extremely elevated at roughly 45% at the moment. So high inflation will continue to erode purchasing power of households, weakening their ability to spend on goods and services, which will weaken overall economic growth in 2023. Consumers in Ghana will also face headwinds from higher taxes that have been introduced to put the country's public finances on a more sustainable footing, which will further dampen their ability to spend. And I think the outlook for investment or fixed investment in the country isn't really much brighter at the moment. So Ghana's central bank has embarked upon a really aggressive monetary tightening cycle, having hiked by 1,500 basis points since late 2021, which will really weaken credit uptake, right? And we have already seen that real credit growth dipped into negative territory in December, which obviously, does not bode well for domestic demand in 2023. In addition to that, the country's debt exchange program will weigh on balance sheets of domestic banks, limiting their ability to provide loans to both the private and the public sector. On a slightly more positive note here, expected production increases in Ghana's most important commodities, so that is gold, cocoa, and oil, will likely improve trade dynamics somewhat in 2023, and that will provide some relief to the economy this year. Although I do want to stress that this won't be enough to offset or really counterbalance a weakening in domestic demand. So overall, our view is that Ghana is not out of the woods just yet, and that its economy will continue to face significant challenges over the coming quarters.
Thanks so much, Mike Kruniger, Senior Country Risk Analyst, Fixed Solutions, for sharing those insights with us.
Thank you very much.
Now on to other stories. The United Nations said Tanzania will be the third fastest growing economy in Africa for this year. According to United Nations report focusing on 30 African biggest economies, Tanzania's economy is expected to increase by 5.6% in 2023 after Cote d'Ivoire and Rwanda. Although the World Bank has ranked Tanzania the 10th richest country in Africa by overall gross domestic product GDP based on the current exchange rate, however, Tanzania is not among the top 10 economies in the continent by overall GDP based on purchasing power parity, that's the PPP. Now, Uganda's coffee exports edged up in March compared to a year earlier as exporters released larger volumes from warehouses to cash in on favorable global prices for Robusta beans. The state-run sector regulator says that in March, Uganda shipped a total about 487,060 kilogram bags of coffee, up 2% from a year earlier. The East African country is Africa's biggest coffee exporter, followed by Ethiopia, and mainly cultivates the Robusta variety of the crop. Now, Rwanda and Malta are exploring new areas of cooperation with a focus on trade and investment in both countries. This was part of discussions held between High Commissioner John Bussinger and the President of Malta, George Vella. Mr. Vella says Malta is looking forward to deepening cooperation in various areas such as trade, vaccine production, and political engagement. In 2020, Rwanda's private sector federation signed a memorandum of understanding with the Malta Chamber of Commerce, Enterprise and Industry to promote trade and investment between the two countries. And that's it on Business Incorporated. Do join us same time tomorrow for another edition. I'm Will Ibang. Thanks for watching.